Good afternoon. Good afternoon. Welcome everyone to Community Candor. We are so happy to be here with you today to talk about what it means to help you straighten out your credit. And thank you for joining the Credit Club series. It's always a good time when we can come to people in the community with our motto of empowering people and building community. And the best way to empower anyone is to give them the information and resources that they need to make sure that they can make informed decisions, which empowers them and it gives them the information that they need to make sure that they can make the correct decisions from reliable sources. Because one thing that you always find out is that you get a lot of information each and every day from individuals that you just see online, right? Even though we're online today, but sometimes you just get random information from people telling you what to do. And some of the information is just totally inaccurate. But what we wanted to do is make sure that we put together a platform of great individuals that understands this very clearly and what you can do and steps that you can take to help you rebuild your credit. And as you know, we're a nonprofit community development corporation located in the city of Flint, but this programming goes throughout all our cities that we operate in Michigan. So please be sure to share this event. So right now, while I'm talking, before I pass it over to our wonderful moderator, Renee, to talk to you some more about this, and introduce our speakers. Please just take a moment, share, right? So share on your social media platforms, LinkedIn. Just copy the link. Let your friends know, hey, if you're trying to figure out what you need to do to increase your credit score and to have a healthy credit life, not just a physical life, but also a healthy credit life. Will definitely help you to be able to save thousands and thousands, and depending on what you do, millions of dollars over your lifetime, just between having a difference between a 600 credit score and a 700 credit score or 800. It helps you save a lot of money in your life. So if you're a penny pitcher like me and you like to be frugal, then this is definitely for you. So I'm passing it over to Renee so she can take this thing over. So Renee Kent, our Director of Special Projects, please go ahead, take us away.
Thank you, Glenn, and good afternoon. Thank you to everybody who's joining us today. As Glenn mentioned, I'm Renee Kent, and I'm your moderator for this session. And before we get started, I want to go ahead and introduce our guests that we have with us today. So I'm just going to call their names, and they're going to share with you, who they are, where they're from, and then we'll get this thing started. So let's go ahead and start with Loretta.
Good afternoon, everyone. I am Loretta Humphrey Cruz, and I am in the Community and Economic Development Department at Fifth Third Bank. And I have been in the community development industry for almost 20 years. And we've been partnering with Communities First for a few years now, and they are very good at what they do. And I look forward to the presentation.
Thank you for joining us, Loretta. And Tanya.
Good afternoon, everyone. I'm Tanya Rose, and I am the Community and Economic Development Manager in the Detroit market. And I have the pleasure of working with Loretta Humphrey Cruz and with Amy Grimes. They're both my colleagues, and it is just a tremendous opportunity for us to continue our partnership with Communities First on this credit repair series, and we're super excited to be a part of it. Thank you, Renee.
Thank you, Tanya. We're excited that you're joining us. Mariah.
Good morning, everyone. My name is Mariah Lawson McClain, and I'm with Communities First. I serve as the Economic Mobility Coordinator, which basically means I do a lot of research on financial education. And so I'm excited to be a part of this series and to not only be a part of this panel, to learn.
Thank you, Mariah. And Amy.
Hello, everyone. I am Amy Grimes, and I am coming to you live from one of our Fifth Third branch locations. I am at the Center Road location in Burton, Michigan, and so I'm really excited to be on this panel with you today.
And we are excited to to have you and really looking forward to your presentation. Thank you for joining us. And I just want to mention, Mariah was so humble in her introduction, but she really did a lot of work behind the scenes in putting this together. So thank you, Mariah. She is part of the reason why we're here today and why we are going to be talking about credit. So before we get started, just a couple of housekeeping items I want to share with the audience. If you have any comments or questions, please put those in the chat. We will address those while we're going throughout this presentation live. So if you have any questions or comments, drop them in there and your questions will be answered. Also, we are going to be displaying a registration link. Please fill that registration link out because there will be some gift cards given away at the end, but you have to be registered to win. So keep a lookout. We are going to put that in the chat and it's also going to be displayed on the screen. So again, keep a lookout for that link. All right, so let's go ahead and get started with our discussion today. We'd like to thank you for joining us for this discussion on credit made easy. We are really excited about this event. This is the first in our credit enrichment series. This is a live event, but we will be having two follow-up events on Thursday, August 12th and Thursday, August 26th in the evening at 5:30. And you'll get more information about those when you register. So again, please register. But again, this is a series designed to inform the community on all things credit. Today, our guests are going to discuss the importance of establishing your credit, the difference between credit reports and credit scores, and steps to take in order to repair your credit. So we've all heard that, credit is important, right? And certainly we know that if you're buying a house, the first step to doing that is establishing your credit. But your credit impacts so much more than just, home ownership. It also impacts, the rates that you pay. As Glenn mentioned when we first started, that your rates are impacted by your credit score. And you end up paying a lot more money for things if your credit score is low. It can also impact landing a job, renting an apartment, purchasing a car, and even something as simple as getting a cell phone. Oftentimes they run your credit. So we're going to talk about, how credit can impact your life. And Amy is going to go through a presentation that really digs into that a lot more. But I thought it would be helpful before we went through that presentation to just share some of our own personal stories about how credit has impacted us and when we really realized how important credit was, whether it was our first experience with trying to purchase something, or if we had to go through something that required us to repair our credit. So I'm going to open the floor to anyone who wants to jump in, because again, I think our audience can really relate to these personal stories. I think we've all had some experience with credit, either impacting a purchase that we were going to make or having to repair our credit. And I'll just kick it off. I went to college, and when I went to college, every corner I turned, there was a table giving away something free and a credit card. And when you first get to college, you're grown, right? So yeah, of course you need a credit card. You don't have a job, but you're grown, and they're giving you a credit card. So I got a credit card. I got several credit cards, and I used them. And then I had to pay them back. And I learned very quickly that I didn't need a credit card. So that was my first introduction to credit. And it took some time to, repair those mistakes, but it was a learning lesson. And so we're here today, hopefully to share some of those stories and share some tools and resources so you don't have to learn the hard way or the same way. All right, anybody else want to share something? All right, I'm gonna have to pick on somebody.
Okay.
Okay, go ahead,
Well,
Laura.
I was waiting to see who was going to raise their hand first. I don't have a lot of fun credit stories, but I think we all have a past. And same thing with you, Renee. When I was grown, I mean, credit card companies and back in the day, they passed out credit card applications and credit cards like they were candy, and I had a lot of candy. And it turns out, like you, the expectation for paying it back, they were serious about that. And it took a long time to, one, register in my head that they really wanted their money. And it did impact my credit. And it impacted it for a long time because apparently it took me a long time to get that. But once I did, because in the learning process, there was a little bit of pain in the learning process. But once you get it, you get it. And I was able to repair my credit. People think, oh, this was before I was a banker, but a lot of people think that if you work at a bank, you have like I don't know, a 9,000 credit score, and you just know everything about money. And that's not always the case. Sometimes bankers and people that work at a bank, they have a learning curve as well. So there's my story. I have scarier stories, but I'm going to stick with that one.
Well, if you guys don't mind, I'll jump in and tell my quick credit story. I was very similar to Renee. I'm proud graduate of Eastern Michigan University in Ypsilanti, but at that time they had when you walked into the student union, they were giving away fanny packs, they were giving away water bottles and baseball caps, and I got one of each. And so what that meant is that I thought I had a free card to take everybody to the local Red Lobster for dinner and all on my tab. And so I had a lot of friends in the beginning and was super excited to take them all out and be the big baller on campus. And then I soon realized that, like everybody said, they wanted their money. And when I realized my parents were not going to write a check for that money and I had to use my washing the dishes money from the student union, I quickly, cut up my credit card, kept it, but just cut it up and didn't use it. But I really thank God for me learning really quickly that it's not free money. And I was told never use the card unless it was an emergency. An emergency wasn't, I'm hungry and I don't want to go to the student union to eat. So hopefully everybody else can learn a lot quicker than me and some of my colleagues have on maintaining your credit and keeping it good.
Absolutely. I think me and you were at the same student union getting the same trinkets and trash, right? But I think the key from that is that a mistake doesn't have to stay with you for life. There is life after you make a credit mistake. It may take some time. And so I don't know, Amy, if you wanted to say something.
Sure. Sure, I would love to chime in here. So I could share the same very similar stories that you ladies shared, just at a different campus, at Michigan State's campus. But what I'll do is I will switch this up just a little bit to share an interesting story about credit of when I was very first married. So when my husband and I first got married, we married young, and the first time that we went to purchase a new automobile, the individuals at that car dealership, because we were so young, assumed that we did not have the finances to be able to purchase that vehicle, nor did we have the credit necessary. And so it was kind of a disheartening experience being young that, individuals were judging us simply based on our age, when indeed we both had graduated from school and had good jobs and had already taken some steps, to make sure that our credit was good. And so it was a very real experience that you need to be in charge of your own destiny when it comes to those kind of things, to know where you stand with your credit. I had already, in being in banking already, I had already looked at what our credit scores were. I knew what we could afford and what we couldn't. And so that's one of the things that we'll talk about today, is really understanding where you are with those things so that you can make informed decisions and not be taken advantage of in different situations.
Absolutely. So let's go ahead and pull this presentation up. We're going to get that on the screen in one moment, and then Amy will go ahead and start her presentation.
Are we ready to go?
Mm-hmm.
Okay. So I introduced myself to you guys a little bit at the beginning, but I'll just give you a little bit of background of what I do here at the bank. So as a financial center manager, and I have been in retail, in banking for my entire career. So I've been with the bank over 20 years now in banking. And one of the things that I am so passionate about is helping individuals with their credit and what it takes to build credit or repair credit, and just really understand that credit. So really excited to bring this to you guys today, and we'll go ahead and get right into the meat of it. So if we can go ahead and go to the first slide there. Kind of give you an idea of what we're going to cover in the workshop. So credit can have a super big impact on your financial life. Your credit report provides a snapshot of your financial habits that, financial institutions, cell phone companies, credit card companies, everyone uses to get an idea of your credit worthiness. So understanding how credit scores and reports work is going to help you keep your finances healthy and help you achieve your financial goals, whether that's buying a home, leasing a car, or paying off debt. So that just gives you an idea there of the things that we're going to learn throughout this workshop. And I don't know if we have the ability or not, Renee. It wanted me to ask some questions to the participants here. Can individuals raise their hands, or do we have any way of finding out if there are those that are out there listening that have checked their credit score, that have requested a copy of their credit report? Do we have a way to see that, to see if anyone has any questions right off the bat?
You know what, Amy? Go ahead and ask questions along the way, and as they come into the comments, we'll let you know what kind of responses we're getting. But
Okay.
Ask the questions, and then we'll just keep moving.
Fantastic. Okay. So before we really get into why those credit scores are so important, let's discuss for everyone what they are, right? Because that's something that we gotta start right at the bottom, right? So we can get our baseline here. So a credit score is a 3-digit rating that tells a lender how likely you are to repay your debt. And Renee, you can go ahead and go to that next slide. Okay. So let's talk about the different categories here. So your very first category there. So poor credit is something that's less than a score of 579. Okay. So if your score is less than that, it's considered poor. And anyone with a score in that area is going to need some help rebuilding that credit history. So then we'll move to the next category. We've got 580 to 669. If your score is between those numbers, it's considered fair. So in that range, it's most likely going to be difficult, sometimes impossible, to qualify for loans. If you do get a loan in that range, you're probably going to pay a pretty high interest rate for that. So then we get in the middle there, we've got good credit. So good credit is between 670 and 739. And you might have a few blemishes on your credit report. You might be restricted to a little bit of a higher interest rate, but you're probably going to get approved for things. Okay. So in that area, you're really at a turning point of, maintaining good payment history and things like that. You can really move that credit score up. Or unfortunately, a few wrong turns could significantly impact your credit negatively there. Very good credit is in that 740 to 799 range. and you're going to qualify for most every loan available. You've probably got a really solid credit history. You've missed either none or very few payments. But your credit history may be somewhat short in consideration. And it's not until you get to a lengthy credit history that you're going to move into that very top category there, the exceptional. That's the 800 to 850 score. You have the strongest credit history possible. You're going to qualify for the very best loan terms and rates. And you're probably receiving offers every day in the mail, right? Because every lender out there is looking for someone with that type of a credit history. So these ratings here that we're showing you, this is for information purposes only, just to give you an idea of what you'd be looking at. We're going to learn a little bit later on as we go through this, how those scores are calculated. Okay. So I've given you those 5 different categories there, but some of you may be asking the question of, what if I don't have a credit history at all? And if that's the case, you're going to be looking at building a credit history, right? And so in that, so many people, I talked about with, being young when I gave a personal story there. So if you're young, or if you've recently immigrated to the country, you have no credit history. It's not a bad thing, and it's definitely not the same as having poor or bad credit. But you will face some of the similar difficulties in getting a loan if you have no credit history. But there are steps that you can take to build credit. So we'll talk about this 2 ways, right? We'll talk about this of those that are first establishing credit or first building their credit. And then we'll look at it for those that maybe have made some missteps and they're looking at rebuilding their credit. Okay. So step 1, if you're looking at building your credit, the very first step is to open a line of credit. This could be a credit card through a bank, a retail store, or it could be a small loan that you get that you repay on time and you repay it in full. So special products such as secure credit cards and credit builder programs are designed to help you boost your credit. But they do have restrictions on how much money you can borrow. And some of them may require you to put cash down as collateral. So that's where that security comes in, right? That secured credit card. If you've recently immigrated to the US, you'll need an immigrant visa and a social security number first before you can open a bank account and a credit card here. And we see that sometimes here in the financial center. So step 2, request that your payment history be reported. If you pay your rent, if you pay utilities, you can request that utility company or that landlord, you can request that they report that positive payment history to credit bureaus. And that can be really helpful for you. But they're not required to do that. So it's definitely something that we recommend that you ask. But just know that it can be a step that they're not willing to do. And then the third, and this is something that's optional, but open a joint account. You may be able to request a family member or a friend with really good credit to go on with you as a co-signer on a loan or a credit application. But what you definitely need to remember is that your actions affect their credit as well. So any joint accounts that you have, you want to be very fervent in making sure that you're taking care of them, because those joint accounts report to credit bureaus. Okay. And then the last step, and a very, very important step, is to always pay all of your bills on time and in full. You never want to miss a payment. If you think you're about to miss a payment, contact that creditor and work out a plan. More communication is always better. If you can contact them, many creditors have programs that they can work with you so that it doesn't negatively impact your credit. So I'm going to stop here for just a quick second because Renee, you asked a question. What about using Experian Credit Booster? Was that a question from one of our participants? Experian Credit Oh, go ahead.
I'm sorry, it just takes me a minute to toggle between screens.
No problem.
No, I know that's an option out there, and so I was hoping that you could mention that.
Yeah, absolutely. So, I am a firm believer in doing everything that you possibly can within your power to help yourself, right? When it comes to credit and your finances and things like that. Um, so interestingly enough, I've seen all the advertisements, I've seen all the hype around Experian Credit Booster. And so I went out to take a look at it for myself. Um, that is so what Experian Credit Booster does, from my understanding, is the booster part of that takes into account things like your utility bills that you pay that automatically come out of your account every month, cell phone bills. It can be your cable bill. It can be all of those things. And what it will do is it will add those on there as what it considers positive trade lines. Um, so I don't have a personal experience of it actually boosting my score, but I do know that it is absolutely free for you. It does give you access to your Experian report, and they are additional accounts or trade lines that are reporting to that. So it is something that I think is great for customers to do. Loretta or Tanya, did you either of you want to pop in with anything extra, maybe from the e-bus that you've seen with that?
No, I don't think it sounds pretty accurate. We actually, and this is not I guess it's not a obvious plug, but we do have Experian. We provide Experian credit reports on the bus now. So, and along with the scores, and that's a little off topic, but no, I think you guys covered it nicely.
The only thing I would add is not only do we provide those reports, you can take those reports home with you. We mail those reports home with you. When you're on the bus, we pull them up for you. But one of the nice things is with some credit cards that you do get, they do report your credit score monthly to you. And that's a good way to kind of help gauge or monitor where you are on a regular basis without having to go in and necessarily pull your credit score down.
Yeah, I would definitely agree with you, Tanya, because things like Experian Credit Booster, Credit Karma is another one. Those are fantastic ways for you to be able to get a gauge of your credit without having your credit actually pulled, right? Without bringing your credit score down from what they call a hard inquiry. So, although I will just caution anyone that's using those things, please understand that those just give you a gauge of what your credit score is. Um, don't expect to be able to pull your score or look at your score from Credit Karma or Experian Booster and then walk into a financial institution and it match up directly. There will be some differences in that. But what you're looking at is the trend with your credit score, right? Is your credit score improving? Is it declining? And what can you do to boost it in those areas? So that would just be the caution that I'll give with that. Many times I'll see customers that will say, well, but on this site or that site, it shows this number and it doesn't match up directly. So anything else with that? Okay. All right. So next thing we're going to do, we're going to move on and we're going to talk about a scenario, right? We're going to give a scenario. We call it a tale of two friends, and really just kind of talk through the differences, like what decisions that they made and how it affected their credit. So Anna and Bella are the two friends that we have here. They've been friends since middle school. They both own cars. They have steady incomes, and they have those incomes so that they can pay their bills. So Anna's credit score is a 530, and Bella's credit score is a 700. Okay. So Anna and Bella decide to buy homes in their childhood neighborhood. One of them receives a loan without any trouble. And unfortunately, the other has a difficult time getting a loan. When she finally does get the loan approved, her interest rate and her insurance premiums are higher than her friends. So I kind of give you the background of their story. So let's see if we can figure out a few of the details, like what's going on here. So the first question is, who has the better credit score here? And, without waiting for responses, I think that one's pretty obvious. We've already talked about the differences there. So Bella definitely has the better credit score currently. Which of these likely is the one that had trouble getting the loan? It was most likely Anna. Okay. People with bad credit scores do have the most trouble getting loans, unfortunately. There are other factors that institutions consider, but when it comes down to it, that credit score is super important. Who do you think's interest rate is higher? That's most likely Anna as well. Because her credit score is lower, her interest rate is going to be higher. And then who do we think whose insurance premiums are higher as well? Again, that's going to be Anna, right? So since Anna has the bad credit score and that's reflecting a bad credit history, it's most likely going to affect her insurance as well. So again, just reiterating the importance of a good credit score. So credit scores aren't the only factor that lenders consider. Factors such as the market, down payment amounts, loan terms, lenders' policies, those can influence the cost of a loan as well. But research shows that one's credit score is going to have the largest effect on approval and on the cost of a loan. So as you guys have seen here, just in the tale of these two friends, credit scores can affect your ability to get a loan. They can affect your interest rates, and they can affect insurance rates. But they can also affect your eligibility for renting a home. Many homeowners and property managers are now checking credit scores as well. So your credit score can have an impact on so many areas of your life. So let's look at like getting a car, right? If you're looking at purchasing a car, your credit score is taken into account for the auto loan. And it can also be difficult to qualify for a lease because if you've had late payments or things like that, that's negatively impacting your credit. Getting a job. Many times employers check job candidates' credit scores to learn more about their reliability, right? If you're not responsible in paying your bills in a timely manner each month, will you be reliable in your employment as well? And then setting up utilities and phone service. So it can be harder with poor credit to set up an account with utility companies, internet and cell phone providers. Some of them will actually ask for security deposits, right? Cell phones being as expensive as they are. I mean, cell phones can be upward of $1,000. And so if you don't have a good credit history, they may ask you to put a deposit down before they'll enter into a contract with you. So essentially any person or organization that's seeking credit, that you're seeking credit from, can review your credit to make sure that they're lending to a responsible borrower. So a lot really depends on that simple 3-digit score, right? So who actually comes up with the credit scoring system? So there's actually a few here. So there's 3 main credit bureaus that we have here in the US. We have Experian, Equifax, and TransUnion. So most all of you, I'm sure, have heard about all 3 of those. And depending on the financial institution that you go to or who the lender is, some lenders will pull a combination of all 3 of those, whereas some lenders will exclusively use one of those credit bureaus. Okay. The most popular scoring model, what we'll call it, is the FICO. So FICO scores are calculated based on a combination of those 3. And like I had said previously when I was talking about Credit Karma, many lenders use their own version of FICO or a Vantage score for credit scoring models. So just to give you an idea, like if you're applying for a mortgage, there will be certain factors within your credit that will be of higher importance than others, right? Your payment history, for example, on a previous mortgage is going to make a major impact on what that scoring model looks like when you're going for a new one. So the bureaus keep track of your credit history separately. So all three of those are separate bureaus. And so it's a good idea for you to be familiar with all three of them because you want to make sure that there aren't major discrepancies between them. And again, that's something I see with customers, whereas something may be reported incorrectly. And it's up to us as consumers to really dig into that and to make these credit bureaus correct those things. So let's next talk about how the score is calculated. Okay. So as I talked about earlier, all three of the bureaus calculate your score differently. So let's just for right now, let's focus on the FICO score. Okay. So bureaus, unfortunately, do not disclose the exact method or formula that they use to calculate the score, but we do know the general factors that they consider. So the most important factors that affect your score are payment history and the amount of debt that you owe. Okay, so as you can see there, payment history is 35% of what goes into calculating a credit score. And then the amount that you owe is 30% of that. So just those two factors alone can affect 65% of your score calculation. So let's take a closer look at them individually. Okay, so payment history, right? That includes looking at whether or not you pay your bills on time. So do you always pay at least the minimum amount? Because if you do, then you're in good shape. But if you make even one late payment, it's going to have a negative impact on your score. So that's why it's so important for you to pay your bills on time and pay at least the minimum amount. So if you have a credit card and you've been paying $100 every month on that, but money is tight this month and the minimum payment is $25, as long as you pay that minimum payment, it will be considered an on-time payment for you. So, if you've got to cut back, give yourself enough grace to understand that, but please make sure if at all possible, you make that minimum payment. The next thing we'll look at is the amounts owed. So that's that other 30%. And it depends on two factors. So one, how much do you actually owe on your credit cards or loans? So owing that money doesn't necessarily mean that you're a risk to the lender. The most important thing, like we said, is making sure that you make regular on-time payments. Something to note here too, if you're an authorized user on a card or you've authorized someone else on your own, their payment history can affect you as well. So just keep that in mind. We'll talk more a little bit about sharing credit later, but so how much do you owe is the one factor. And the second factor is what percentage of your available credit are you using? So typically people who are using less than 30% of their total available credit are a lower risk to a lender than those who are using, upwards of like 90% of their credit. So to put it simply, if you max out your credit card, it can negatively impact your credit score. Okay. So keep in mind, if your credit card, if you have one credit card and it has a maximum credit limit of $1,000, in order for it to affect your credit in the best way, you need to be using less than 30% of that, right? But if you are maxing that card out month after month, even though you're making that payment on time, it can be negatively impacting it because you're using so much of that credit that's available to you. The other couple of things that they're going to look at there, they look at the length of your credit history. So, how long have you had a credit file? Which is important to look at because many times I'll see customers that say, well, I don't use credit. Well, that's okay until you need to use credit and then you have no credit history, right? So even if you don't have an intention of using something right now, you may want to look at opening something up so you're establishing a credit history. They'll look at new credit and then they'll look at the types of credit, right? Is everything in your report a credit card? Or is it spread out? Do you have an installment loan? Do you have a credit card? Do you have a mortgage? Are you utilizing different credit buckets? And it looks like we're running a little bit shy on time here, so I'll try to boost through these a little bit faster for you.
I'm sorry.
So let's go to.
I'm sorry.
What's
A quick question about
Sure.
your credit card and using less than 30% of that credit line. So say that I am maxing it out, but I'm making my payments on time. And let's say if my credit line is $2,000, I'm using maybe 1,500, but over the next 2 or 3 months, I pay it off completely. So does that have a negative impact, or does that show, hey, I'm responsible and I'm paying back not only on time, but of course, way above whatever my monthly payment is?
Absolutely. So great question. So that will actually paying your credit card off in full will actually have a positive impact on it, and it will be a longer positive impact. So if I can explain this right, like you said, you had a few months, right, where your card was up above that 30%, and it may have temporarily impacted your score, but you were making that payment on time. That is the most important thing, because when people look at your credit report, they'll typically look at the last 24 months. And although you may have had a couple of blips in there where your credit was up above that 30%, that's going to go away as soon as you pay that card down to a zero balance, right? Or as soon as you pay it down below that 30%. But if 3 months ago or 6 months ago you paid a payment late, that's going to stay with you for 24 months of credit history. So that's why it's the most important thing. Like, I can't emphasize enough, at least make that minimum payment on your credit score. Does that answer your question?
Yes, it is.
Okay, awesome. Good. Okay, so the cost of co-signing, right? So I'm just going to spend a little bit of time in this, because really what I want you guys to understand with this is both the pros and the cons of a co-signer. So, many people think that co-signing on a loan is a helpful action to take if you want to help out a child, you want to help out a significant other. But it's important to know the effect that it might have on your own credit score. So you just have to understand that, you want to make sure that you're in a committed relationship and that you both have a mutual understanding of the effects that it's going to have for both of you on co-signing. You can see here, Anna's house is in foreclosure. She needs to take some steps. She's trying to get a loan. Should her best friend Bella co-sign on a loan with Anna? Well, that's a very personal decision, but not something that I would recommend doing. Because how will co-signing affect Bella's score? If Anna misses one payment on that, we've talked about the influence, right, that missing a payment can have on a credit score. It can have a major impact for both of them. So,
Amy, can I interject with another question?
absolutely.
Because I know that we still have a lot of slides to go through, but I want to make sure that we answer some of the questions that come in the comments. And so there's
sure.
a question about medical bills and how those can negatively affect your credit score if you are late or not making payments on those.
Okay, great question. And again, something that I see very often, unfortunately, with the cost of medical care, right? And how much it can impact a person's finances. So the advice that I give to my clients here at the bank regularly is that what people don't often look at when they look at their credit is, I liken it to a balancing scale, right? You can have good things going on in your credit, and you can have those bad things going on in your credit, and you have to find a balance between the two. Many times with medical bills and things like that, when they do go to collections, they very much impact your credit score, depending upon the type of credit that you're applying for, depending upon the institution that you're applying with. So it is something that you should stay on top of. You should do your very best to work out a payment plan with those individuals. Many times, and this, please don't misunderstand me, is not a guarantee, but many times, medical institutions like that will do an excellent job of helping you with some sort of payment plan, with some sort of agreement, without it negatively impacting your credit. Because ideally, they want the same thing that you do, right? If it just goes to your credit and it just sits there as a bad debt, no one wins in that situation. So my rule of thumb that I give to customers here all the time is constant communication with whoever it is that you have an outstanding debt with, would be the very best that I can say with that. Was there another question too?
I don't have a question, but I did want to interject a comment. And this is more so a personal rule that I have for myself. I never co-sign for anything that I can't afford to pay off. If something unexpected were to happen for the person that I co-sign for, even though it might be a family member or a good friend or someone that I love very much, sometimes unexpected things happen that, and they intend to pay. But if they can't pay it, it does affect you. So just as a personal rule for myself, I never co-sign for anything I just can't pay off myself to keep my own credit good. So something to consider is what I would say.
Absolutely. Tanya, I think that's a great point to make, that that's a good rule of thumb for yourself, right? And sometimes the best love that we can share is that of what we call tough love. And we just simply have to say no. So, yeah. Okay. So we're going to jump ahead just a little bit here. So Renee, I was going to kind of get past those there, like the scenarios that they gave. And yeah, perfect. So let's go here of information on how you can get a copy of your credit report. Okay.
And we can be brief on this, because our next session on August 12th, we're actually going to do a deeper dive into pulling your credit report. So if you
awesome.
want to just, breeze past this and share whatever points are most important, and then we can move on.
Yep, fantastic. Okay, so really, let's just, we've got this up here. You've got the web address where you can go and you can pull. So myfico.com will give you a complete printout, or a complete hard copy of your all three of your credit bureaus. FICO does charge you a fee for the actual score, but you can get all of the history of what's on your credit. And sometimes that's the most important thing, right? We talked about there being discrepancies in credit. We talked about looking back to see if there have been late payments or things that you didn't even realize had come through to your credit. So information is key here. So if you can get your hands on a copy of that report and really look through that, that is going to point you in the right direction, most certainly. Are there other questions that we have out there for us?
No, not at the moment.
Okay. All right. So let me catch up with where we are here in the slides.
And Amy, I would say, because we're short on time, and we do have 2 additional sessions where we're going to be digging into some additional information. Just let me know if there's a slide or 2 that you really want to make sure that you highlight today, and then we'll we'll make sure that we cover the rest in the next 2 sessions.
Okay. So in my opinion, the thing that I think is most important, like if you walk away from this session with anything, it's that, you know, of course that credit is important, but that it can be fixed, right? There is no credit situation that you're in today that can't be adjusted. Yes, it will take time. Yes, it will take energy and resources, but there is help that's available to you out there. And there are many individuals within the community. I can speak for Fifth Third to say there are many individuals here at Fifth Third that would be happy to walk you through, you know, what it's going to take. And sometimes the most important step is just taking a step, right? It's just simply doing something with it. So regardless of how you do that, whether it's getting onto Credit Karma, whether it's going to Experian Credit Booster, whether it's going to the FICO.com, or coming into a Fifth Third Financial Center and we can get you enrolled in some things, anything that you can do to get your credit, to get your information, and to get a starting point is going to be helpful. And then really going through and understanding what's on that credit report and understanding the steps that you can take to remedy it. All 3 credit bureaus have ways that you can dispute things that are on that credit report. If you pull a full report of any of them, they will have contact information, phone numbers, addresses, where you can get to the bottom of that. And because it is something that is so important, to our financial lives, you do need information, and you need someone to be able to help you with that. And so, super excited to be able to be a part of the presentation today, just to give you guys a little bit of insight. Maybe this is your first time ever hearing about credit scores. Maybe there are questions that you have been embarrassed to ask in the past, but credit is one of those things that I wish more were taught to us when we were younger. We all shared individual stories of, getting to college campuses and thinking that signing up for a credit card just meant we could have a free pizza that night, right? And it's much, much more than that. So I would love to answer any questions. I would love to be able to help anyone out that has, anything that they want to ask.
Thank you so much, Amy. I want to expand on a couple of things that you just mentioned, and I think that's so important. The embarrassment piece. I think understanding that, we all started from somewhere and have been through something, and there's no reason to be embarrassed about any mistakes that you've made. And the best way to get through those is to work with a professional that can help provide you some guidance. And in light of all of the credit repair scams that are available, I think it's important to know that your local bank or credit union has professionals that can help you. And I think you mentioned that at your institution, you will pull credit reports and go through that information with individuals that are interested in learning more and understanding better where they are and what they need to do. And I believe that there are also several home ownership counseling organizations, nonprofit organizations that provide those services at free to reduced costs in communities that your organization also partners with. And so can you maybe speak to, is that something that is offered at all the branches? And are there any nonprofit partners that you want to highlight as well, so that we can get these resources out to individuals that are interested in taking a look at their credit and maybe making some fixes?
Yeah, of course. I love what you said there, because so many times I have customers that will come in and they'll tell that they don't want to apply for anything, or they don't even want to discuss it. And it's because their fear of the embarrassment, right? They know they've messed up with their credit at some point in their life. So maybe they had a mess up 5 years, 10 years, 15 years ago. And so out of fear, they just put up that wall of, no, I'm not going to do anything else with it. And that's what we're here for. And to be perfectly honest with you, that's what I love sitting down and helping customers with, is really understanding that you can repair that, you can do things. And so, yes, there are programs that we have here to offer at Fifth Third. Early on in the slides, we talked about secured lending, right? So we offer a secured credit card here at Fifth Third. So as long as you have a job, as long as you have a way of repayment, it doesn't matter what your credit score is. We can offer you a credit card so that you're building a positive impact in your credit. It will report to all three credit bureaus as a positive trade line for you. Many times, my mortgage officer, who's a community lending officer here in the Flint area, she will recommend customers to see me about getting a secure credit card, because over a 6 to 12 month period, one of those secure cards can impact your score positively 60 or 70 points. That's huge when it comes to getting a mortgage, right? It can mean the difference between being able to be a first time home buyer and having to stay as a renter. So that's really impactful. I'll let Loretta or Tanya talk about some of the nonprofit organizations that we partner with, but I wanted to throw that out there. That we can do.
I'll make this really.
I'm sorry, what?
I'll make this really quick because I know I'm going to make this really quick because I know Mariah also has some things that she wanted to say as well. But we do have nonprofit partners like Operation Hope that will work one-on-one with you, review your credit score with you, and help you through the process of giving you suggestions on how to repair your credit. Not just them, but we have a list of partners depending on where you're located at and which one best fits your needs. So just go into your local branch. I'll put my information in the chat, and we'll be more than willing to help you. Thank you.
Thank you, Tanya. We'll make sure that we share that information for individuals that are interested. And I just want to share something really quick, because I know that I'm a numbers person, a visual person. I need to kind of understand what's being said and what that looks like, related to dollars and cents. And so we've talked about savings. We've talked about, little things that you can do to improve your credit score by, I believe you mentioned 50 or 60 points. And I just want to share what that could mean. If two individuals are borrowing $350,000 for a mortgage, and, it could be any amount, but we'll just go with that for the example. And one borrower has a 700 credit score and the other borrower has a 760 credit score. Their interest rate could vary by 22%. And that 22% credit score difference, or that 22% interest rate difference will result in a savings of $16,000 for one individual, right? And so, that's a lot of money to leave on the table when these resources are available. But I want to turn it over to Mariah, because I know that we're short on time. And I just kind of want to put her on the spot as, a recent graduate and someone who's new to credit and establishing credit, if there are any questions or comments that you want to share.
So, in the light of time, I'll share my story just a little bit, and then just ask a quick question. I was on the university campus to walk past those tables where they would give out t-shirts. Like, that was the thing at Michigan. They gave out like so many t-shirts. So it's like, oh, I want a free shirt. I need something to wear for school. Let me sign up for this credit card. And so my first, about 3 years ago, when I actually got my first car, and that was my first hit on my credit. And I didn't know thing about it. I didn't have anything established, but I knew that when I got my first bill, that I was paying a little bit more than someone who had established credit. So I guess my question is how do we stay away from acquiring way too much credit? Which cards or which lines do we apply for that work best for us? And in light of what we go for, and what things that we stay away from.
Thank you, Mariah. And so, Amy, what type of cards for somebody who's just starting out should they look at? And then I'm going to add another question that came in through the chat that's related to credit cards. If someone is denied a credit card because of the level of debt they have versus their income, what's the best way to solve for that? So what are the best credit cards to utilize if you're new to credit? And then if you have a high debt situation, what's the best way to solve for that?
Okay. So to answer the first question, if you're new to credit, that doesn't necessarily mean that you have bad credit, right? You just are new to it. You don't have much established yet. Many institutions, because you don't already have a bad history, will allow you to get a first card or a first installment loan. I would steer away from cards like store cards or things like that. And I would steer away from anything that's going to charge you additional fees or things like that. So depending on what exactly that looks like for the individual, if you're not eligible for what we call a traditional card at that point, then absolutely I would go with one of the secured features, right? A secured credit card, for example, here at Fifth Third, you can get for as little as $300, which means you put $300 in a savings account. We put a hold on that savings account, a collateral hold on it, and then we give you a card with a $300 limit that you use, throughout the month and pay back. And then that's reporting as a positive trade line to all three credit bureaus. So when you're doing that, that not only is establishing that positive trade line, it's establishing positive payment history, and it is a starting point for your credit journey, right? So my recommendation always to younger individuals is start something now, right? I talk to their parents when they come in and set things up for them to really get something established before there's anything negatively impacting their credit. So that's kind of to talk to yours, Mariah, on what it would look like for someone just starting off with credit. And then for the second question, the other one about being denied due to high debt versus income, something you have to, I'm sorry, was someone interjecting? Oh, okay. Sorry. What I would do with that is we really need to look at how is your credit laid out? Meaning, is the loan that you have, is it a very short term? And then in essence, making the payment significantly higher? Can we spread that out a little bit for you? So just sitting down with someone that's on your side that can help you at any financial institution, they can look at that. Because just to give you a for example, if you've got a loan that you're paying back over the next 3 years and it has a payment of $500 a month, so they're telling you that your debt to income is too high. That's the amount of debt that's going out each month versus what you have coming in as income. Can we spread that over 5 years or 6 years and then make that more manageable for you on a monthly basis? And when that happens, then you can look at adding additional credit. Sometimes what will happen too with that is they'll say that your debt to income is too high if you don't have enough trade lines, right? So if you simply have one trade line, you have one credit card that has $1,000 limit that you have a substantial amount on, can we look at getting you additional so that you have $3,000 available? You have 3 $1,000 credit cards, so that's kind of spread out a little bit for you. So hopefully that answers your question. Sometimes that does come up for us, that customers, their debt to income will look too high. Keep in mind too, a lot of times when I see that, it's because you've co-signed for a child or a grandchild or something like that. And maybe you're on a fixed income and you were trying to help out that individual, but now that's showing up as a payment that you're responsible for every month, even though that other person might be paying it. So that's where it can be hurtful to co-sign for things also.
Great, thank you for sharing that information. We covered a lot of information today, and we didn't even get into everything that we had planned to cover, but that's okay. We will be back again on the evening of August 12th and 26th. There is an opportunity to register for those sessions. We shared the link in the comment or the chat section, and we'll share it on the screen again. We also mentioned that it's on the screen now. So yes, please register. And we also mentioned that we're giving away 2 gift cards today, thanks to Fifth Third. And so we do have 2 winners for that. Thank you so much for registering, Melvin and Patrice. We will be following up with you directly to make sure that you get those gift cards. And thank you so much to our guests, Amy, Tanya, and Loretta. And thank you to Mariah for putting this together. I think we covered a lot of information and shared some nuggets. And we look to share more in our next 2 sessions. So thank you again for joining, and everybody have a great rest of your afternoon.
Thank you.